You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the ever-expanding, ever-exciting Options Insider Radio Network, as well as from our online home, theoptionsinsider.com, where you can find all these programs as well as a bunch of other great content hitting all different aspects of the world of options. And of course, in addition to our website, if you want to find all those programs, where can you go? Well, a lot of places: iTunes, Stitcher, AHA Mobile, and of course, our mobile app available for iOS, Android, and Amazon Fire OS. You can download instantly or stream all of your favorite episodes of the Option Block or any other program on the old network. And while you're doing that, of course, you can hit that feedback, that question, that comment tab there, and shoot us a question via email, Twitter, Facebook, however you want to do it. Even leave us a voicemail. No shortage of ways for you guys to make your voices heard on your favorite programs and to interact with the hosts of those shows. Again, that's the Options Insider Radio Network mobile app, available for Android, iOS, and the Fire OS. All right, and joining me on the old all-star panel today, first off, he hasn't been on in a while, so we're happy to have him back. None other than the Greasy Meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program, sir.
Hey, thanks. Good to be here. Was out on leave. I was out on holiday for the last week or so, but it's good to be back. I'm excited. Kind of a fun day, and I'm looking forward to a great radio show.
I always expected you were a stealth British fellow.
Oh, indeed. Indeed.
It's all that pip pip cheerio stuff. I suspected you for a long time, sir, and now the cat is finally out of the bag. All right, and also joining us on the old all-star panel today, you know him, you love him as the man of many hats, a.k.a. the Viceroy, none other than Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Jacobson, welcome back to the show, sir.
Don't ever call me Mr. Jacobson. Yeah, it's good to be here, Mark. Thank you. A fun day today. We were up right out of the box, and almost everything was up with the exception of gold today. But a lot of interesting action in the market today, and I have a handful of real interesting stats that I want to share a little later in the show. But fun day and a good day overall.
We love it. We love stats. We love data, and we love days like this. So without further ado, let's get right to it. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, welcome to the Trading Block. This is, of course, the portion of the old program where we break down what was moving, what was catching our eye in today's markets. And as Alex and Mark alluded to there at the top of the show, it was a bit of an interesting one today. Most of the major indices moving north. It wasn't one of those days where you had to kind of struggle to find the narrative, or you had to kind of scratch your head and watch the markets and say, which way are they going now? Now they're down, now they're up, now we're selling off, now we're rallying. It wasn't one of those days with a very confusing narrative. It was pretty straightforward. Right out of the gate, we were rallying, and pretty much that was pretty much the case for the entire session, with the S&Ps closing up about half a percentage point, or nearly 10 handles, to 1977. The Dow up about 3/4 of a percentage point to 17,055, and the Qs up right in between, about 0.6 of a percentage point. So splitting the difference there, and the VIX cash coming off about 1/4 of a point to close at 11.81 today. A lot of interesting stuff throughout that myriad of activity. Mark, since you haven't been on in a while, perhaps we'll start with you. What caught your eye in today's activity, and what perhaps was top of mind over there in the realm of the pit chat today?
Yeah, it was just, the fact that the VIX futures actually took it really hard relative to the VIX. And we continue to see that in a momentum-driven market, just because vol is overpriced just because volatility is overpriced doesn't mean it's not also underpriced. That's one of the major things, is that more and more we're seeing that you can buy options, or one can buy options and make money, but not necessarily in the same way that we as professionals typically think. And the other piece is the VIX was down. Obviously, we had some weekend effects, so it was down more, but the VIX futures got hammered. They got absolutely hammered in both July and August. There was a good chunk of time where those futures were down. Let me see if they ended up that way, where the AUG future was down more than, the July future was down way more. Yeah, they're both down more than the VIX cash.
Interesting. To what do you attribute that over-aggressive, perhaps, pounding in the near term of the VIX curve?
I guess everybody's decided that all is well and there's nothing to worry about. And, people were a little worried into the weekend, I guess, but it doesn't look like there's really much to worry about. I think we had a little blip last week, but I think that we're back to the same old story, which is slow creep higher. And that's it.
Interesting. The narrative for the VIX term structure over the better part of the past year has been pretty much a lessening of the severity of the slope in the far off part of the curve, where traditionally in years past it's been just a bit out of control. We've seen that coming off gradually over the past year. Now you're saying they've taken it to the front part as well. They're just crushing it left and right.
Oh, yeah. They're all about it. The back futures have come in a lot. The curve is flattened substantially. And then some of the other ones maybe not as much, but the curve is really flattened up pretty aggressively.
And Mr. Viceroy, you said a lot of things caught your eye. Give us a taste of what you were watching over there at OX by Charles Schwab today.
Well, there are a couple of things going on. It looked like LULU finally threw the towel in today. That's an OX stock that we've had a lot of activity in, and it kind of, popped a little bit in the last couple of weeks, but today looked like capitulation. It looked like the expectation of retail numbers coming this week is going to be lackluster at best. The other thing I was looking at today is I was looking at open interest in some of the index ETFs, because I got a call this morning from a buddy who's a quant on the big institutional desk, and he said that their in-house opening customer put call is the highest it's ever been. Now, he's talking about the open interest that they're carrying, and that's an interesting statistic, because if it's opening put call, that implies that there has been a lot of hedging, and it's been in the Spider, the Russell, and the Qs. And I'm beginning to wonder if people are abandoning the VIX as a hedge vehicle and just going back to traditional put buying in some of the more liquid ETFs. So a lot of curious activity today. Other than gold and silver and LULU, just about everything else had green arrows in front of it.
That wouldn't surprise me. We've seen a lot of anecdotal evidence, to your latter point there, about people migrating out of the VIX products and the volatility products for a while. Just on our Vol View show last week, we discussed, and some people wrote in about how they were looking at using other products. That's something we've advocated quite a bit there, always using the direct hedge whenever possible. And it also is a good surrogate for the vol as well. People forget that component. They think they have to go out to, a VXX or a VIX option or a VIX future to get the to get the vol, when you can get a lot of that vol and all of that other good stuff just by using a SPY or SPX puts. I think you're right. Even though these things have been bid up out of control, and it doesn't surprise me to hear that stat that the put call is so high. We've been seeing that, anecdotally and in smaller form in other places. Of course, SPX skew getting near record levels, a lot of the other indexes following suit. So it doesn't surprise me to hear that, but to hear it in aggregate is somewhat interesting. And you're right. I think people, even though these levels are high, people are still choosing to come in and pay these inflated premium levels for protection in these products like SPX and SPY and others because they want to stay long. They're willing. That's essentially their bullish premium right there. They want to stay along this market. And of course, the flip side, perhaps the contrarian side to all that, is that people are paying this amount of premium. The obvious look at that is like, oh, people are worried about near-term contractions. And that certainly could be true, but also they're hedged. So they're in now. They paid their money. They want to get their ride. So they're going to stay long, and that paves the way for perhaps a lot more upside going forward. Is that your take as well, Mr. Viceroy?
Yeah, and I think, given this market strength, given everything that's going on in the world, there's all this constant bad news, Mideast, South China Sea, everything's going wrong, and this market just seems resilient. So, markets do respond to catalysts, and I thought a number of these might be the catalyst, but that hasn't been the case. And I think one thing that we're continuing to see, and one thing that's been a thread this year, is every time the momentum stocks pop, little money comes out of them and moves to the more traditional Dow and Dow transportation. And I think that's what's been going on here. I mean, we're a dozen Dow points from the high. The trannies are coming along with it. I'm an old quantitative fundamentalist, and I still believe in Dow theory. And I think that's what we see going on here. And, can there be a downside catalyst? Sure. We've all talked about this. Mike talks about how bullish he is. I'm bullish. As soon as you say that, tomorrow something goes wrong and the market sells off 6 or 7% or something. And then, everybody who's been worried and negative is vindicated. Truth is, I think this market's going to melt up. Goldman this morning, raised their target for this year to 2,100 on the S&P. Morgan Stanley raised their target. There's nowhere else to go. I mean, there's nothing in the interest rate market. Yeah, our rate's going to tick up over the next year. Yeah, but we all know that. And the surprise might be that they don't tick up over the next year, and that's going to drive this market higher.
Uncle Mike, of course, couldn't join us today, so I will do his stand-in and do his traditional rundown on some of the names in case some of the listeners at home are jonesing for their Apple and GLD fix. By the way, listeners, we are, of course, recording this on Monday, July 14th, for those of you playing the home game. Okay, Apple, of course, closing today. Up about $1 and change today, a little over 1%. Close at 96.45. And GLD, the other side of the coin today, selling off pretty aggressively, down about 2.5% or nearly 3 handles. We said last week on the Vol View show, not a heck of a lot going on from a gold vol perspective last week. Underlying moving gold vol, not so much. Perhaps we'll have to revisit that in this week's episode of the program. Speaking of episodes, as we are wont to do these days, we did it last week. A lot of people liked it, so we have a little time today. Maybe we'll revisit it again. Mr. Viceroy, I will give you the choice. Which one should we play the trading patterns guessing game on this episode? Should we do it for maybe SPY, see what people trading SPY are doing on the OX platform? Should we do maybe something esoteric like VXX? I will throw the door open to you.
Let's start with SPY.
All right, here we go. Mark and Mr. Viceroy. I, of course, can't play because I'm looking at the answers right in front of me. Of course, I can pretend to play if you like. But we're going to kick things off. Alex, since you picked it, we'll start with you. What is the number one correlated underlying to people who are trading SPY on the OX platform today?
Guessing Facebook.
a strong guess, as always. Certainly always up there in the top 10 whenever you're talking SPY on OX. But today, surprisingly, not so much. Number 6 for Facebook. So well into the second half there for Facebook. Mr. Meatball, see if you can get a little higher.
I was going to say Apple.
The other stalwart when you're talking SPY on the OX platform. Another good guess. Unfortunately, even lower on the list. Number 7. I will give you guys a bit of a hint.
No, here, let me go. Gold.
All right, there you go. Now you're getting a little warmer. Is there any particular gold product you're looking at?
GLD.
Okay, GLD. That would be a good guess. Unfortunately, that one, not so much today. But I will say this. I will say you're on the right frame of mind. Gold is in the mix. Alex, I'll toss it to you.
Well, we have clues now. GDX, the miners.
There may be gold miners, but not GDX.
Okay. Okay. Well, then the baby miners.
Yes, the junior gold miners were lighting up the tape today for SPY traders over there at OX to the tune of number 1 being JDST. That's, of course, the daily junior gold miners 3X, and then the JNUG. So, yeah, JDST and JNUG both taking up the number 1 and number 2 spots. Let me see. I think that's it for metals-related slots, so the rest are open.
Let's say the Qs.
Always a good guess when you're guessing SPY, and you're right. Number 9, though, way down on the list. Surprising. All the traditional guesses today have been usurped by the mini gold miners. Alex, what's your next guess, sir? Let's see if we can fill out the top 5 here.
The Russell, IWM.
A good guess, but nowhere on the list today.
Tesla.
Good guess as well. Also not on the list. So number one, number 2, daily junior gold miners, and number 6 and 7, Facebook and Apple. And that's about all we've guessed correctly so far. So yeah, a little
VIX.
Yeah, no, not on the list today either. It was all sorts of. I'll give you a couple of hints. Think futures and a little bit smaller for one of these.
Like the mini gold futures?
Close.
Or the S&P futures?
There you go, the E-mini, number 4. I'll just round out the rest of them for you because they kind of. No, he guessed VIX. No VIX. So number 1, number 2, both the junior gold miners. Number 3, the TQQQ. That's the Ultra ProShares Q ETF there.
What kind of gunslingers are trading out?
I know they're slinging some crazy esoteric stuff. Number 4 is the E-mini. Number 5 is, of course, the diamonds out there. Number 6, Facebook. Number 7, Apple. Number 8, the E-mini Russell. Number 9 is the Qs. Number 10, Twitter. Interesting. Both of you guessed VIX. I, of course, can't do VIX in this platform because it's only on the equity underlyings here. But I can do something analogous really quickly. We'll do another quick one because this is kind of fun. Let's do VXX. Let's say people who are doing VXX, as much as I malign it, it's kind of interesting to see what people who are trading VXX are also trading. Mark, you can go first.
UVXY.
Nope.
Really?
Alex, your turn, sir.
What had volatility today? The 10-year future? The future on the 10-year bond?
No, sir.
SPY.
No again.
No, yeah. Tesla. It wasn't Tesla. Wasn't Facebook. Twitter.
Yes, number 9, Twitter. Always in the top 10 here on OX.
Yeah, number 9 is like missing.
I'm gonna say Apple.
A good guess, but no.
They're not even in the top 10?
Not even in the top 10. Twitter taking that place instead. I'll give you the hint. Both of you think broader.
Abbott Labs with the M&A.
Oh, E-mini futures.
Yes, E-mini again. Number 1. E-mini. So the number 1 thing that VXX traders are trading on OX is the E-mini. So they're savvy enough to trade the E-mini, yet they're also trading VXX. Hopefully they're doing it in the right context, slinging them back and forth against each other.
Maybe they're doing a pairs trade where they go long, what I like to call the Texas pair, which is long SPY, short VXX.
I'm thinking along similar lines. I'm being charitable. They're trading them in relation to each other on ratio, something like that. They're not just gobbling up one and the other, hopefully. Number 2, a little esoteric. I'll just give it to you. Seadrill, SDRL. That's a weird one. Number 3, actually, I'll give you a hint. You guys were thinking metals before. Think metals again.
The junior gold miners again?
No, not this time. Actually, the big gold August future.
So people that trade VXX sling some size.
Yeah, that's weird.
They aren't messing around.
Yeah, that's weird.
That's the idea hub for futures. That's what's generating all that traffic.
Well, there you go. See, your baby coming back to hit you, Alex. A couple more guesses and we'll move on, but this is kind of fun. One more guess for each of you. Alex, go ahead.
To the VXX. I guess the 10-year. Copper.
Interesting choice. Gold on there. That is the only metal on there. I will say this: there are other futures products and other commodity products on there represented. I will say that.
Did the 10-year? Did copper? We did the E-mini. I have no idea.
All right, Mark, take us home, sir. What's your last guess?
Netflix.
An interesting one. No, not on the list. So, for those of you playing the home game today, listeners, people trading VXX on the OX platform. We're also trading number 1, the E-mini, number 2, Seadrill Limited, SDRL, number 3, the Gold August Future, number 4, the Dow Jones Mini Future, the September Future, number 5, the E-mini NASDAQ September Future, number 6, NatGas, the NatGas August Future. Interesting. Number 7, XIV. No surprise there. Surprised you guys didn't guess that one. Number 8, FireEye Inc., ticker symbol FEYE. Number 9, Twitter, like we already said. And number 10, rounding out the top 10, is the SEP Euro Future. So VXX traders slinging a lot of futures and a lot of commodities, and also VXX. I would not have guessed a lot of those. Interesting stuff.
You know what? Not to turn this into an ad for what futures and futures options have become, but you realize now that the CME platform supports all this stuff electronically. The individual investor has really begun to trade this stuff. I mean, for a while it was all the E-mini, but the individual investors now are trading a lot of both straight futures and futures options contracts now. It's becoming a very, very big business.
Yeah, a lot of these names would not have even been possible a few years ago to guess on a platform like this, so it is pretty cool. All right, interesting stuff, listeners. We could play this all day, but now we have to keep on rolling with the show right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what that funky tune means. It's time once again for the old Odd Block, the portion of the show we break out the weird, the wild, the downright unusual activity that's catching our eye in the old options markets today. If you want to follow along, play the home game, perhaps read more detail on these alerts or get to some of the alerts we don't have time to get to here on the show, then surf on over to theoptionsinsider.com. Click on the unusual activity call out there or the tab on the homepage. You can find all of this stuff as well as a lot more that we don't have time to get to. Kicking things off today, we're going to start off with a newcomer here. This is Danaher Corporation, ticker symbol DHR, closing today $78.81. This is the name that does about 4,000 contracts a day. So from an odd block perspective, pretty sizable. And blowing the doors off that today to the tune of about 15x, 61,000 contracts going up today in Danaher. And pretty much the lion's share of that, 20,000 by 40,000, so a total of 60,000, is a pretty sizable call roll here. And to find this, you got to look on out in the Jan expiration cycle. And what caught our eye was, like we said, massive size going up in the Jan 82.5, 87.5 vertical call spread going up 20,000 by 40,000 times. The open interest on the 82 halves is about 27,000. So clearly that leads us to believe that this is probably a closing and then opening up on the higher strike to the tune of, we saw paper coming in selling the 82 halves and then opening up again, buying more, 2x of the 87 half. So clearly this is someone who liked his 82 half position and now taking that off and rolling it up even higher and putting it on 2x because we liked it so much. It went up not one chunk, but actually 6 large chunks which is kind of interesting, an interesting execution going up around here. It's more interesting too because this name's been kind of stuck around the 79 level. So interesting time to be doing this. I mean, clearly the trade has worked out for him, but perhaps not super aggressively. And it's still he wants to clearly put on a lot more of this baby. Mr. Greasy Meatball, since the Rock Lobster is not here, I shall toss it to you. What's your take on this guy going up, and not just up, but 2x up here on these Danaher Jan calls?
Well, he only paid 10 cents for the trade. So it's a nice little 1x2. If you want to get long cheaply and you think you have an idea of kind of where the underlying is going to go, these 1x2s can be absolutely great trades. And I think that's what this guy was doing. He's bullish. So not a bad little trade.
No, not a bad little trade at all. I guess I wouldn't call it little. 60,000 contracts. Mr. Sebastian. All right, moving on here to another newcomer here in the old odd block. This is Wisconsin Energy Corp, ticker symbol WEC. Closing today, $44.80, down about roughly 1% on the day. It's the name that does pretty much nothing from an options perspective. South of 300 contracts a day, doing 2,300, so we're nearly 8x that today. So not a bad little bump here in good old WEC. And what we saw was what looks like a call roll. Again, calls rolling. This time, though, not just rolling up, but rolling out. We saw approximately 1,090 of the WEC July 45, Jan 50 call spreads going up for a dime. Open interest on the July is nearly 2,000, 1877. The Jan's about 600. So clearly looks like he's rolling a short position. Looks like he's buying back the July, selling the Jan. Again, looks like a buy rider. The July is coming due. The stock's been hovering around those levels. He likes it, wants to roll it up a little bit. Nothing too surprising here. We see these types of trades going up on a lot of utilities. People like to override on them to generate a little bit of extra juice. This guy doing the same thing. Mr. Sebastian, this one catch your eye at all over there at the pit today?
Yeah, you know, we've been watching a lot of these go up, and you know, the more now that we're doing the chat, I'm seeing a lot more of these face to face, and it's interesting the way some of these people will kind of throw this stuff on. So yeah, this is an interesting one, but we've seen all kinds of crazy stuff in energy for a while, and so you know, there's something going on in energy. I'm just not sure why, but if you look at utilities and energy, they're one of the areas where option volume's way up.
Yes, interesting stuff here. And you're right, the way these people sometimes unwind it is almost more interesting than the actual intention behind the trade itself. It's just a standard up and out, but the way they do it, sometimes the ratios they do it, the strike selection is sometimes worthy of further note. That's why we like to bring these up on the show. Listeners, so you guys can play the home game, follow along, and say, I maybe wouldn't have done it that way, or perhaps I would have done it that way. Either way is interesting and worthy of note. Speaking of worthy of note, we're going to flip the script a little bit again here. Another newcomer, actually, to the odd block. I like when they're all newcomers. This is AGCO Corporation, ticker symbol AGCO, AGCO. Closing today, pretty much unched $53.52. This is the name that does about 700 contracts a day, doing about 3,000 or so today. And what we saw was we see a lot of collars going up in a lot of names. We profiled a lot of those in the past on the old odd block. Of course, the collar listener being buying put, selling call to finance that, typically in the same expiration month. People like those. They like to structure them as zero cost collars. Sometimes they see them a little bit different where they migrate the selling portion closer to the nearer portion of the curve and migrate the buying portion a little bit farther out and use the front portion to try to finance that. That's what Uncle Mike does on a regular basis and talks about a lot here on the show. A lot of different ways to construct these. This guy going for the same month. And it seems like he's closing out the old collar to the tune of the Nove 5060 collar, coming in, selling out the Nove puts, 50 puts, about 600, nearly 700 times, and buying back the Nove 60 calls 1,000 times. So he did it on a bit of a ratio. We see this a lot too. People sometimes either overriding the collar to pay off some more of that put, or they don't want to hedge all of their underlying, whatever the case may be. Usually it's a cost thing. They don't want to pay that much, so they structure the collar on a ratio so they can still get as close to net zero outlay as they can. This one went up for 40 cents. So this name has retreated a little bit. This guy perhaps being a bit savvy, taking the collar off while it's working for him. We'll see maybe if he's going to reestablish. There's a lot of open interest here. There's about 2,400 contracts open on both of these strikes. So it looks like he probably has a lot more perhaps to go. So that is also interesting, perhaps taking only a portion of the position off while it's working, maybe leaving the rest on in case the worst does come to pass. He has still some protection on, and then if it goes against him, at least he took some of it off the table. I'd imagine this approach appeals to you, Mr. Sebastian. You're always talking about if you have a hedge, make it work for you. This guy taking some of it off the table, but perhaps saving some for a rainy day as well.
That's exactly right. Good work. I'm proud. Yeah, you're learning. No, I mean you gotta, if a hedge works, either close the whole position or do something with your hedge. Otherwise, it will end up not working.
Words to live by, listeners. All right, one more here before we roll on out of the old odd block. This is, I think, might be a record. 4 newcomers here in the old odd block today. This is Beazer Homes USA, ticker symbol BZH. Closing today, $19.39, up a dime on the day. It's the name, again, from an odd block perspective, fairly robust, 1,200 contracts a day, doing just a little bit north of 9,000 contracts today. And again, pretty much all of that coming in one ratio call spread that they are taking off. So staying with our narrative towards the end of the odd block here of unwinding positions, we saw in particular the AUG 1925 ratio call spread going up 2,850 by 5,700 times, so roughly 1 by 2 there. Listeners, going up for $1. Again, this was an unwind of a trade he had put on obviously earlier, coming in today, selling out the nearer the money call, so the 19 call, and then buying back the 25 call on a ratio as well. Again, if you put this on for a credit, perhaps earlier, when you put it on as a ratio, you typically do it for the premium harvesting portion of it, or at least mitigating your outlay. So let's be charitable and assume this guy did it for, at the very least, a very, very favorable price, if not a credit. And now today, unwinding it for a credit. I'd imagine, Mr. Sebastian, you're fairly positive on this one as well.
When I can buy something at a credit and then sell it back at a credit, I am the happiest man in the world.
You're an easy man to please. That's why we like having you on the show, sir. Yes, this is indeed how it should be done. Open for a credit, close for a credit. Smiles all around. Speaking of smiles all around, it's time to keep on rolling right on into the happiest portion of the show, because Alex always brings us such good news. It's not a wet blanket at all. Yes, it's time, once again, for the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what portion of the show it is. And of course, I was just kidding, Mr. Vicer. I think today is going to be a much more uplifting, indeed inspiring edition of the Express Block. So what do you have in store for us today, sir?
Yeah, the first rule of education is amaze and inspire. We're going to talk about the Schwab side today, and an interesting development on the Schwab side, 3- and 4-legged trade tickets. Now, those of you who are OX customers, this has been a fixture in the OX trading platform, and including the OX mobile platform. But when Schwab bought us, one of the first things they talked about is migrating the terrific OX tools over to Schwab. So the development teams have been working feverishly, and that's not a proverbial feverishly. They've literally been working feverishly. And we expect to release the 3- and 4-legged trade ticket to Schwab Mobile and to Street Smart Edge in the month of September. So Schwab customers who have been anxious to see a 3- and 4-leg trade ticket. Now to do a 3 or 4 leg trade, they've got to call a service desk, and at Schwab, there's still a surcharge for that. But the 3 and 4 leg trade ticket should be out there in September. Nina, who runs our active investor education, is already building the webinars for that. And those should start late next month to the beginning of September. But that's very exciting because it brings the Schwab platform to kind of parity with the traditional option-centric platforms.
You know, you can't really undersell that because you're right. Schwab bought you guys for your options expertise and your functionality, and yet it's taken so long to integrate that. And I know there's been a lot of Schwab clients. Many of them have written into our shows, into our website saying, hey, why can't we get some of this awesome stuff that the OX clients can get? If you're an OX listener to this show right now, you're probably saying, oh, what's the big deal? But if you're a Schwab guy, you're saying, wow, thank God. We've been struggling to get all this good stuff you guys are always talking about. So I'd imagine there's quite a few happy Schwab campers out there today.
Yeah, and they'll start to see webinars on it and educational materials on it probably in mid to late August. Now, again, it's going to mobile first and Street Smart Edge first. Then the quarter after, it'll go onto schwab.com. But the ability to have it on mobile, I mean, if you're a schwab.com customer and you're frustrated and saying, why don't I get it? You will have it on the mobile platform. In the same way when we released Idea Hub to the Schwab customers, we started on the mobile platform because that's where a lot of the development has been. And you know, again, mobile has become a phenomenal success in the brokerage community. And as I mentioned before, on some days, almost a third of the activity now occurs on mobile. One other point, I know I talk a lot about Idea Hub because that's my baby, but we talked about futures and futures options today. And at 1:30 Chicago time, when I was doing my spot check, conventional premium harvesting. When I say conventional, those are the equity options, the index options, the ETF options, and futures options. At 1:30 Chicago had 140 credit spread ideas. So if you are an OX or a Schwab customer and you have access to Hub, even if it's on the mobile platform, it's become a very target-rich field. Now, a lot of that has to do with weeklies, and people are just loving weeklies from the premium harvesting side. So next time you have a chance, take a look at the Idea Hub. And if you're on Edge or mobile, a little over a month, you'll see 3 and 4-legged trade tickets.
You know, it is fascinating. You mentioned the weeklies there. It is fascinating to see the migration of that platform, or that product, I should say, from inception to what it has become in the actual marketplace. I don't know if I've ever seen a product start off so clearly geared at one audience and one particular use case and be so fully turned 180 degrees and adopted by another use case. It was designed to hedge earnings events, essentially, and other near-term events, and it's just become embraced wholeheartedly by the premium selling community as a result. Does that surprise you as well, Alex?
No, you know, when I worked in the exchange community, I was always told by my clients on the discount brokerage side that about half the business is some form of premium harvesting, whether it's covered writing, iron condors, or just selling premium. And as markets have gotten slower here, the amount of premium harvesting that's being done is a bigger part of the business. You do, the week after this, we will do a lot of business because that's Apple, Amazon, and Google earnings week. But there's a lot of event-related business, but it's just that event-related. The premium harvesting is day in, day out, and customers who have embraced weeklies. Now, I know I've said this before. I kind of like a 2-week trade more than I like a 1-week trade, but customers who have embraced weeklies just love it. And you know, it's a testament to the appetite amongst customers. We've talked a lot about minis lately and why they didn't work, and I think structurally they were impaired right out of the box. But weeklies have been a phenomenal success, and I expect in our lifetimes, one of the exchanges is going to list a daily, which will make life real interesting.
Yeah, one of them will get there eventually. It's just a matter of time. Good stuff, as always, Mr. Viceroy. Now it's time to keep on rolling. Usually this is where we dive into the strategy block, but listeners, as you may realize, there is no Uncle Mike here today. So rather, we're going to take advantage of that to give you guys a little bit more time here on the old All-Star panel, have an extra edition of the mail block this week.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. As the man said, this is the portion of the show where you guys get to join us here on the old All-Star panel, make your questions, your comments known. No shortage of ways to do that. Surf on over to the website, shoot us an email, a question via Facebook or Twitter, leave us a comment on the old website, and, of course, go through the mobile app. You can find all of those methods as well as the voicemail. No shortage of ways to make your voices heard on the old All-Star panel, just like our first listener did here. Mr. Neal Augustin, he writes, I like the discussion on the recent show about getting free gamma going into earnings. It makes sense since the contract should experience minimum decay. But don't you have to use a contract that expires after earnings, preferably the earnings week, in order to get that bump? If you use the contract that expires prior to earnings, it should decay like normal, correct? Well, good question, Mr. Neal. This refers to a discussion we had on the last episode. I believe it was from the Odd Block, actually, where Uncle Mike was pontificating what the use case might have been for a particular trade. And we were discussing if it was maybe one of those free gamma trades that Andrew always likes to pontificate about here on the show going into earnings. But I mentioned that if he was going to do that, he probably would want to do it on the actual earnings week as opposed to expiring the week before, because if he was doing that way, structuring the trade that way, he wouldn't really get that free gamma bump that he was hoping for, as opposed to doing it perhaps with a weekly, the week of earnings, and then you could take it off right before the fact. And enjoying a lot of gamma in the process. Mark, Andrew isn't here, but I know this is one of Andrew's favorite trades, that free gamma going into earnings. I know you like it as well. How do you typically structure these types of trades?
Well, I mean, there's really no such thing as free gamma. But, ways to do that would, use of calendar spreads, and then, short time spreads, long straddles, things like that. I mean, that's usually, or a strangle, double calendars. I'll try to own something where I think the decay is going to be really slow, and sell something where I think the decay is a little speedier in front of it. Or I'll just go out and buy a strangle if I think it's cheap enough.
I think the Incredible Hulk would disagree with you, sir, that there is no free gamma.
No, those are gamma rays, not gamma trades.
Yes, you're right. I was close. In the right ballpark. Radiation, trading, all the same thing. Mr. Viceroy, anything for our friend here, Mr. Augustin?
No, Mr. Sebastian is right. Last week, I was talking to a client and was trying to structure a trade in Amazon, and he couldn't understand why the last week, I think we were looking at 370 or 380 calls, which were, of course, fairly far out of the money, and I think Amazon's moved $26 in the last few days, but we were looking at the weekly expiration that went off last Friday, and they were like, 40 cents, and then the regular expiration this week were 60 or 70 cents, and the weekly after those were $6. And he was like, what? How can that be? And you say, that's earnings week. That's earnings week. And if you want to capture some of that, Mark's idea of calendars is certainly a way to do it. But let's turn this question around, and let's also caution our listeners that when you see something like that, these are 40 cents, these are 80 cents, these are $6, you go, oh, golly, I'm the only one to see that. I'm going to sell some of those because no one has figured it out. Realize everybody sees this stuff, and they're $6 for a reason. And ask yourself that immediate question, is it earnings week or is it some type of announcement week? And you can see that in the option prices.
Yeah, we joke about free juice here all the time on the show, but we are just joking. There is indeed no totally free juice, but what you will get is a much reduced rate of decay. It will all bottle up going into that earnings week and then come out after the event. So if you get out before that event, you got essentially a lot of days with dramatically reduced rate of decay, and that is an attractive thing if you're a long premium trader. So when we say free juice, that's pretty much what we mean. All right, next up, we have a question here from Trader64. He writes, spread decay question. Mark said in the mail block in response to a listener question. Everyone's writing in about other listener questions. It's a great listener queue loop here. All right, he goes on to write, Mark said in the mail block in response to a question about spread pricing that the at-the-money and in-the-money options would decay at different rates to make the spread widen. Since it takes a substantial amount of time, should I always count on capturing a portion of the maximum profit in each of my spreads? If so, what percentage is reasonable? Thanks for the show, Mr. Options Voice. Well, you're welcome there, Mr. Trader64. And this indeed does refer to a listener question we discussed a few weeks ago. Someone wrote in saying, hey, I bought this spread. It has this max profit potential of, I believe it was $6. The underlying went my way. You know, I'm now short at the money. My long is in the money. Why isn't it at my full, essentially, potential spread price? So we had a bit of a conversation there about the differing rates of decay of at the money versus in the money. Member listeners, that highest rate of decay is always going to be on the at the money strike. So in the scenario the listener wrote in about, that actually was ideal. He had the in the money, which was decaying slower. He was long that. He was short the at the money, which was decaying more rapidly. That spread would widen out eventually. But you're right, it does take time. And this is, again, why I've always kind of rebelled against the use of these expiration graphs to educate about options. It's understandable. It shows the extremities of these positions. It shows the extreme outliers. But that's really what it is. And you should bear that in mind when you're looking at these graphs. If a spread goes your way, it doesn't mean you're going to have max profit right off the bat. You have to wait some time for the decay, the deltas to change, all these things to kick in. So this is something you should have whenever you're trading spreads. You shouldn't expect if it's a max profit of $6, you're going to have $6 unless you're going to hold this thing all the way or very close to expiration. And I think anyone who trades options knows you're not going to be doing that very often. Mr. Sebastian, I think we'll start with you. What's your take here for our friend Trader64?
Well, I mean, I don't know that I'd go for percentages of this. You know, well, things like an iron condor, things like that, I usually try and go for like half the credit. I think that's reasonable, depending on when I get in. You know, I think the key is just setting reasonable profit targets and loss goals rather than trying to get X% of a trade. I think you'll find that works out much better for you in the long term.
Now, I just encountered this recently on a repair trade I was doing in an IRA account, and I took it off for about half of the expected profit because, again, I just didn't want to wait around. I had other trades to do. So that's a good, probably reasonable barometer, somewhere around half. Probably pretty reasonable. Mr. Viceroy, what's your take on this for Mr. Trader64?
Uncle Mike has a rule on this that I like a lot, but if you can get half or 60%, I would go look for another trade. I would take the money and run. Mike makes a comment frequently about he'll be in a spread and it will have hit 80% of his profit potential. And I'll paraphrase what he said, at 80%, I'm gone. I think one classic mistake, and a couple shows ago, we did my biggest trading error, and my biggest trading error was exactly one of these. And it cost me a fortune. I was trying to get out of something at a nickel that was trading at a dime. And as I recall, I ended up getting out at $9. Yeah, get out of stuff like that. Don't be greedy. The excuse that I'm trying to save commission, sometimes I'm going to hold on a little longer. 8, 9 times out of 10, that'll work for you. And then every once in a while, you'll just get hammered, and you'll never do that again.
All right, good stuff, listeners. As always, if you have more questions, more comments, send them in. We do a big mail block explosion, mail block roundup on our Thursday show, coming out on Friday, of course, for you listeners. But now it's time for us to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, and we are indeed getting into the teeth of it here, getting into the teeth of earnings season. We had, as we're recording it today, this morning, Citigroup here on Monday. Tomorrow, as you're listening to this, listeners, on Tuesday, you'll have JP Morgan, you'll have Goldman Sachs, Bank of America coming up on Wednesday, Morgan Stanley on Thursday, so all the financials coming out this week. Next week is the big retail-friendly, tech-heavy names like the Googles, the Intels, and what have you, and of course, my favorite, the former stealth, not so stealth anymore, CMG coming out. We also have the Widowmaker on the docket on the 21st as well. So there's a plethora, I would say, of names coming out that are interesting and exciting for you options traders to keep an eye on. Mr. Viceroy, we'll start with you. What are you watching for the rest of this week, sir?
Same list of names. All the financials are this week. eBay, Yahoo, but I think you covered it. Still looking at the 10-year. A lot of volatility in the 10-year today. Yellen is going to be sharing some news with us on Wednesday. Looking at that kind of stuff, I think we're going to take the highs out. I think when we finally do, we'll get real confirmation and power through them. I think financial earnings are going to be a little mixed this week, but we'll see how earnings play out.
Mr. Sebastian, the floor is yours, sir. What are you watching for the rest of this week?
Yeah, we've got some retail sales. Earnings end up being kind of a wash. I think there's I'm going to be watching to see whether we get something that gives us a little bull catalyst and maybe we make a run at 2,000 in the S&P 500.
What about this VIX futures apocalypse here? You think it's going to keep getting crushed in the near term, or you think they've taken pretty much all the juice out that they can at this point?
Oh, I think that they've got August down pretty good.
All right. Thank you for that, Mr. Sebastian. Unfortunately, that's all the time we have for the Around the Block segment. That's also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts, my partners in crime, see what they have cooking that may interest you. Of course, Uncle Mike couldn't be here, so surf on over to RCM Futures or indeed the RCM Wealth Advisors websites. Check out what they have cooking for you guys over there. And Mr. Viceroy is coming down the pike over there at optionsexpress.com.
I'll just showcase 3 of the events. Wednesday, the 16th, Hub for Futures being done during the day, during the trading day. Thursday, Nina's going to do short puts. And Thursday night, 8 o'clock Chicago time, I will be doing the old hub, the big hub, Hub for Securities Options, doing that one from Casa Jacobson because a lot of folks can't come to a webinar during the trading day, so we get requests for things being done in the evening. So doing that one at 8 p.m. Chicago.
And Mr. Sebastian, what's coming down the pike over there in the land of the pit?
Well, we just launched our annual Option Pit Boot Camp, getting ready to start at the beginning of August. And you can go to optionpit.com/events to check it out. And I've been enjoying doing our chat room. If you have some interest in our chat room, shoot me an email, mark@optionpit.com, and I'll make sure to give you an extra good price, and maybe and we'll go from there.
And I see you've embraced my branding. Now you're calling it Pit Chat. So I'll be expecting my consulting fee forthwith, sir.
Oh yeah, of course. Dollars heading your way.
I love it. Good stuff, Mr. Sebastian. And on behalf of Mark and Alex and Uncle Mike and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and, of course, for downloading the app, and indeed for writing in with such great questions and comments. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.